they're trying to prevent people from getting too long, too leveraged by introducing some two-way risk in the market, right? It's not going to go up every day, but you got to be smart enough to recognize that this is a massive bull market. Yeah, if you get a big pullback, you could take advantage of the fact that other people are getting chased out of this market. I mean, silver could easily hit a new record high this week. Gold, is a little bit further from its high. Gold still has a couple of $100s to go because gold, I think, almost hit 5,400. So we need a bigger rally in gold than we do in silver. But they're both likely to make new highs. And I'm going to get into some of the fundamentals because there were a lot of very bullish news items. One of them, I think, is the end of the government shutdown.
Renowned economist and market analyst Peter Schiff delivers a sharp update on what he sees as the next explosive phase in the gold and silver bull market. He explains that current market volatility isn't a sign of weakness. It's a natural part of a powerful uptrend designed to shake out over-leveraged traders before prices surge even higher. According to Schiff, both gold and silver remain poised for record-breaking highs, with silver potentially setting new records within days. Gold, while slightly behind, could rally toward the $5,400 mark, signaling renewed investor confidence amid global uncertainty. He emphasizes that investors should see market pullbacks not as threats, but as strategic opportunities to accumulate positions while weaker hands exit. Adding to the bullish case are strong fundamental drivers, including recent government policy shifts and the resolution of the shutdown, both factors likely to stimulate demand for hard assets. As Schiff underscores, the message is clear. We're still in a massive metals bull run, and those who recognize it early could stand to benefit the most. If you found this helpful, like, share, and subscribe to the Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
And that was really the catalyst for the $100 rise in the price of gold. $100 plus was the end of the government shutdown. Now, a lot of people might have thought intuitively, well, wouldn't that be bad for gold? I mean, wasn't gold going up because the government shutdown was bad for the economy? It was creating uncertainty, and that was benefiting gold. And so that once that uncertainty was behind us, once the government reopened and that was good for the economy, that would hurt gold. That's what a lot of people might have thought. But the opposite happened because the government reopening isn't bad for gold. It's the government staying open that's bad for gold. Because when the government is open, it's doing bad stuff. It's spending a lot of money. It's borrowing a lot of money. It's printing a lot of money. The problem with the shutdown was we didn't shut down enough government. Maybe if we shut down a lot more government, that might have been bad for gold. But the fact of the matter is it's business as usual in Washington, D.C., and that's good for gold because it means the reckless spending is going to continue. The money printing is going to continue. And so inflation is going to get worse. The dollar is ultimately going to crack. And all of this is bullish for gold and bullish for silver. But before I get to some of the other things that happen, I also want to juxtapose what's happening in gold and silver right now to what's happening in crypto and Bitcoin and the whole crypto industry. And this is also happening in general because, the Dow Jones hit another new record high today. We're getting closer, right, to a 50,000 Dow, which doesn't really mean much in the context of $4,000 gold, right? The media won't talk to you about that. But we're at, 48,250 or so in the Dow. So the Dow hit a new record high today. But the NASDAQ was flat to slightly lower on the day. So you're getting more of a rotation continuing out of growth, particularly technology stocks, which have had, they had problems last week and they're having more problems again this week. So you're seeing some money coming out of the tech sector. But before people started moving money out of tech, they were moving money out of crypto. Gold stocks, some of them have made new highs. Barrick Gold made a new high. Their earnings came out on Monday. Again, blowout earnings, record revenue, raised the dividend. The stock's up about maybe 13% in the last 3 days. And it's at a new high, so it took out its high. I noticed IM Gold, another stock we have in our even in our value fund. That stock hit a new record high today, or I don't know if it's a record going back, but 52-week high. So some of these stocks have taken out their highs, but the vast majority of stocks are still significantly below where they were when gold and silver prices were not that much higher than they are right now. But it's just that fear entered the market, and it's just taking a little bit of time for that to, go away. People have a memory of that. But again, that's what the markets are doing. They're trying to check the enthusiasm. They're trying to prevent people from getting too long, too leveraged by introducing some two-way risk in the market, right? It's not going to go up every day, but you got to be smart enough to recognize that this is a massive bull market. This is early, and any downturn is simply an opportunity to add to your positions. That's it. And yeah, you don't need to lever up. If you're going to lever up at all, you got to wait for the flush out. You got to wait for the big drop if you're going to do something on margin.
Renowned economist and gold advocate Peter Schiff breaks down the surprising factors driving the latest surge in gold prices, including the end of the U.S. government shutdown, which added more than $100 to gold's value in just days. Contrary to what many expected, Schiff explains that reopening the government isn't bad for gold. It's actually bullish. Why? Because an open government means more spending, more borrowing, and more money printing, all of which erode the dollar's strength and fuel long-term inflation. According to Schiff, this business-as-usual approach in Washington is setting the stage for an even stronger gold and silver rally, while the U.S. economy continues to rely on debt expansion. He also contrasts the performance of gold and silver with the struggles in tech and crypto markets, pointing out that as investors exit speculative assets, they're rediscovering value in tangible stores of wealth like precious metals. Gold mining giants such as Barrick Gold and I Am Gold are already reporting record-breaking earnings, dividends, and new highs, confirming Schiff's view that the bull market in metals is still in its early stages. Market pullbacks, he says, aren't a warning. They're an opportunity to accumulate. Let's get into the interview.
Gold was up about $70 today, but it was up $100 on Monday. So as I am recording this podcast on Wednesday evening, gold is back at 4,200. In fact, it did trade above that earlier today. In fact, gold was only higher than it is right now on 5 days in history, right? This was before the correction. Silver, on the other hand, has had an even bigger comeback. It was up better than $2 an ounce today. It actually traded above 53.50 intraday. It backed off a little bit. We're at 53.31 right now, but we're only about $1 below the record high. The highest silver got in that initial run a few weeks ago was 54.40. We came less than $1 away from that today. In fact, based on where silver is right now, there was only one day in history where silver traded higher than it's trading right now. So for all the people that were talking about the end of the bull market, there's only been one day that we've had a higher price. Yet despite that, there are plenty of silver stocks that are still in bear market territory. I looked at a couple of big ones today that were down. I think you're down about 30% in Coeur d'Alene from the high, about 20% in Endeavor Silver, about 10% in Pan American Silver. The only silver stock that I noticed that made a new high, because it was up 8% today, was Hecla Mining. But the fact that so many silver stocks are basically in bear markets when silver is trading at the second highest price that it's ever traded, it just shows you how quickly the sentiment soured just on a sell-off. And remember, silver got down to about $46 in change at the low, and now we're back up to 53 plus. And as I said, 50 is no longer the resistance. I mentioned that on the podcast I did on Friday when I just got back from the New Orleans conference, and I mentioned that there wasn't a lot of exuberism there. But it was tempered, and there was a lot of people that were worried about a bigger correction, a lot of people talking about taking profits. And what I was saying was the mistake that people are going to make in this bull market is taking profits too soon. Now, sure, traders, you could have sold and bought back these gold stocks. They did have a big enough pullback. In fact, you could still buy back if you got out right at the top. But most people aren't going to get back in. They're going to get out and, they'll be waiting for a bigger correction. The corrections are generally very swift.
Gold and silver are once again proving the doubters wrong. As both metals surge near historic highs, Peter Schiff points out that this is no dead cat bounce. It's confirmation that the bull market in precious metals is alive and accelerating. With gold climbing back to $4,200, silver trading just below its all-time record at $53.50. The so-called correction is now being exposed as nothing more than a brief pause in a powerful uptrend. Despite these incredible price levels, many silver mining stocks remain deep in bear market territory, lagging far behind the metal's performance. Schiff highlights this as a sign of shaken sentiment. Investors still underestimating the long-term potential of this metals rally. Historically, such disconnects between metal prices and mining stocks have been the perfect setup for explosive moves once confidence returns. As Schiff warns, the biggest mistake investors make in bull markets isn't missing the top. It's selling too early and never buying back in. With inflation pressures mounting and gold outperforming nearly every asset class, the setup for both gold and silver remains stronger than ever. The smart money knows every dip is an opportunity, not an exit. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.